This conference will now be
Yes.
recorded.
So if that's the case, then you're going to have to come up with a way to do that yourself. So let me see if I can share my screen. And let's see if we can look at some tools to help us. Now, there are four financial statements. Uh, the income statement, which has the net income on it. I guess everybody can do that. Statement of changes in equity, which shows how much of that income was retained in the business. And when you're trying to balance, you have to always remember that it's not the beginning retained earnings, which in your problem is zero, but it's the ending retained earnings that goes on the balance sheet to balance out. Then we go to the balance sheet, and assets are supposed to equal liabilities plus stockholders' equity. The balance sheet starts at retained earnings up, so it does not include dividends. And finally, there is the statement of cash flow. And what this statement is going to help us with is determining how viable the company is. Are there any issues? Uh, that is how did the cash change? Because as we saw, people can create income. They can create income, but you got to have cash to go with it. So a lot of time these companies were creating income, but they did not have the cash to go with it. So we have the cash flow statement that we'll be beginning on tonight. And when we look at a company, there are three sources of cash: operations, investing, and financing. The three sources of cash. And the purpose of a company is to, once you form that company with common stock, at the end of the day, you got to increase the cash through earnings. You must increase the cash through earnings. And we have to make sure that that's happening. And at some point in the next week, you're going to be using this information to analyze a company in terms of whether you would invest in that company or not. But we'll talk about that a little bit later. So this new statement, you hadn't done it yet, it provides information on the liquidity and solvency of a company. It's additional information on changes in accounts, assets, liabilities, and equity. It eliminates the effect of accounting methods. Sometimes, you can use an accounting method that might produce income, but it might not reflect increases in cash. And it shows the timing and probability of future cash flows, and it can aid you in detecting fraudulent activities arising from journalizing inappropriate accrual basis transaction. When we have a statement of cash flow, there's three types of activities we're looking at: operating, investing, and financing activities. Part one is operations. How much of the cash is provided by operations? Part two is investments. And part three is financing. And part four is changing cash. So, to give you a little sense of what we're talking about here, uh, let's assume that you graduate and you have a job that pays you $100,000 a year. I don't know why all my stuff is disappearing so. It has run away. Let me. hmm, Let me just check something a second. Let me. Okay, I think we're back together now. So let's assume that you have a salary of 100,000 at graduation. So what would you be interested in doing if you had a salary of 100,000? Typically, most people would want to buy some additional assets. So you may say, well, I'm gonna get a new car, new place to stay, some other types of things, and I might spend 30,000 on that. Then you may say, I may want to pay off some student loans, $20,000. And I would still have 50,000 left over. So let's look at the example. You made 100,000. You bought some new assets. So if you graduated and you working, you definitely want to buy some new assets. So that reduces your 100 down to 70. Then you want to pay off bills, student loans, 20, and have cash left over. That is what you want to look like. That's what you want to look like if you graduate. So when we look at a business, it's the same thing. Operations is the salary of the business. That has to be positive. Investments is that's where the company is expanding. That will be negative. Financing, paying dividends and paying bills having money left over. So the statement of cash flow has these four sections. How much cash from operations? It needs to be positive. In a good company, the company is expanding, and so investments is going to be negative. Financing is going to be negative because they're paying dividends uh, and they're paying off debts, and they have a positive change in cash. So this is the statement that you need to look at. The income statement and balance sheet are fine, but you need to look at this statement. There be sources and uses, sources of cash, use of cash, and this is all cash basis and what the change is. So what you should just realize as we get in the statement, if a company does not have a positive number in operations, then it's problematic. If a company does not have, that's just like you not having a salary. Uh, you can get some money by selling your house and your car, but you got to have a salary. So a company has to have operations from the sale of its assets. Then it has a negative number here to expand, a negative number here to pay dividend investments, and the change in cash has to be positive. So this is the statement that we're looking at. Let's see how we get this statement. As you remember, we have the fundamental accounting equation, asset equal liabilities plus owner's equity. We can expand this equation to say asset equal liabilities plus common stock plus retained earnings. Then cash plus the other assets equal liabilities plus common stock plus retained earnings. Then we put cash over here by itself. Cash equals liabilities plus common stock plus retained earnings minus other assets. And finally, cash equals current liabilities plus long-term liabilities plus common stock plus retained earnings minus the current asset minus the long-term assets. And then we add in the contra accounts. But overall, then, what we've done is said that, and we can put the deltas here, the change in cash has to be explained in terms of the changes in every other account. So cash is the key account. How did cash change in terms of current liabilities, long-term liabilities, common stock, net income, dividends, uh, current assets, long-term assets, and the contra account? And so every year you have to look at how the cash changed for the company. Now, with our statement of cash flows, we go back up here. We have sections 1, 2, 3, and 4. In section 4 goes the cash, and it's the change in cash. And that's always the answer to the problem. How much did cash change? Okay, that's where that goes. So when we look at that statement, what it is reflecting is that we probably had sources of cash of say $1 million, and then we spent 700,000. Our change in cash is 300,000. The first source of cash is going to be from operations. Okay, that's the first source of cash. And the first thing we look at is net income. So when we get ready to look at operations, first thing we're going to put in here is the net income. If the company have net income, that's a source of cash. If it had a net loss, it's a use of cash. We want sources of cash, but we can have losses, so that would be a use of cash. Now, so the net income is going to be the first thing we're going to put in there. The second thing we're going to put in there, looking at these little contra accounts, we're going to put in the operations depreciation. We put depreciation in because that's a non-cash item. We've subtracted that in coming up with the income, but that is a non-cash item. Okay, the third thing we're going to look at as we look at this equation, we'll come down here. Let's look at current assets. They're going to go in part one. If there's a decrease in the current asset, then it's a source of cash. If it's an increase in the current asset, it's a use of cash. It has to be one or the other. So for a current asset, if it increase, excuse me, if it decrease, I'm just going to put a D here. If it decrease, it goes here because cash came in. If it increase, it's going to come over here. If I can get these over here. So notice what's happening. If the current asset decrease, then you got some cash. If it increase, it's a use of cash. Then we look at the current liabilities. If the current liability increase, it's going to operate just the opposite. If it increase, it's a source of cash, such as if you get a loan. On the other hand, if the current liability decrease, you have to pay it all. So it would be a use of cash. Let me put that D there. Maybe I'll make this. So you have to think a different way, but this is the only way you're going to be able to make those decisions yourself. So just bear with me and we'll look at an example of how we do this in a little while. So those are the main items that we're going to find. So in operations is net income or loss, depreciation. If the current asset decreases, it would be a source of cash. If it increases, a use of cash. When you buy something, your cash goes down. When you sell something, it goes up. Current liabilities, if you borrow something, your cash goes up. On the other hand, if you pay it, it goes down. Now, in the second section, uh, we like to see this negative. So, if the long-term asset if that asset increase, it's a use, and that's fine. But if the long-term asset decreases and you got cash from that, this is like if you sell your car and you got some cash. That's not what we want. We want to be able to, be in a situation where we're buying assets. So this is what goes here. So notice the investment is buying long-term assets, plant and equipment. Okay. Then let's look at financing. And let's look at common stock. That's going to be in part 3. And if it increases, it's a source. And long-term debt. Long-term. If the long-term debt increases, it's a source. Now, just the opposite happens when these assets decrease. When these items are on it, when these accounts decrease. Then we have one other item, dividends. Dividends are always gonna, be here. They they do kind of increase, but they're gonna, it's a use of cash and where it is. So I'm just gonna leave dividends there. So remember we said the change in cash equals all of these items. Current liabilities, long-term liabilities, common stock, net income, dividends, current asset, long-term asset, contra accounts. And then you saw this chart. Cash goes in part 4. The current liabilities go in part 1. The long-term liability go in part 3. Common stock goes in part 3. Net income goes in part 1. Dividends go in part 3. Contra current assets go in part 1. Then the long-term assets would go in part two. Okay. So let's see how we do that in terms of a problem. And we have this in-class problem here. So we have the income statement. So you see, you have to know how to have income statement because we're going to use these statements to prepare the statement of cash flow. So this income statement says that we had sales, what's cost of sales, gross profit 125. We had operating expense depreciation 225. We had a net loss. We sold some IBM stock, so our loss was 75,000. Then we have a balance sheet. And on this balance sheet, hopefully, uh, everything equals out. Let's see, total assets 450 over here. So I think when we put the total down here, this is 450. I think this totals out to be I think this is 300, 500 is 800. So to prepare a statement of cash flow, you prepare it from the balance sheet and the income statement. So that's why you have to know how to do a balance sheet and an income statement because we're going to prepare it from this. Now, since we covered a lot and since we're all confused now, how do I get, something done on this statement? How do I get something done? We got the balance sheet and the income statement. Now I have a template here. This template is it's in this handout, and this template is also in Excel in course content also. So that you won't be so confused and not be able to do nothing, I give you 4 things to do first. Number 1, so when you do a cash flow statement, the first thing you're going to do is go to part 4 of this template. This is a template. And you're going to put in the change in cash. That's the answer to the problem. That's the first thing you're going to do. Then the second thing you're going to do is you're going to put in the net income or loss. Then the third thing you're going to do is put in depreciation. And then the fourth thing you're going to do is put in dividends. So those are the 4 things we're going to do first to analyze the change in cash. And so we got to analyze the change in cash in terms of all of these accounts. So the first thing I'm doing, I'm looking at the change in cash. That's 0. So I come to the balance sheet, I go to the cash account, and the change in cash is 0. I put that 0 right here. That's the answer to the problem. The answer to this problem is once I combine part 1 operations, part 2 investments, and part 3 financing, when I look at all of those changes, I've got to come up with an answer of 0. The second thing I told you to do was to go to the income statement and get the income. We had a loss of 75,000. So I'm gonna take this 75,000 And since it's a loss, I'm going to put it over here as a use. If it had been income, it would have been over here. The third thing I asked you to do is put down the depreciation expense. So I can go get it from two places, but right there it says depreciation is 25,000. So I'm gonna put 25,000 here. And the final thing I told you to do is to put down the dividends. Now, we don't have any dividends, but we know, let me just see. We know that there's a statement of retained earnings, okay, that you're supposed to prepare. And that statement says the beginning balance plus the net income less the dividends gives us the ending retained earnings. Okay. So this says the retained earnings at the beginning of the period was 300,000. And at the end of the period, it was 200,000. Plus net income. Well, I had a net loss, so I've got to subtract it. And so what numbers would my dividends have to be to make this 200,000? Well, I'm at 225 now, so the
25,000.
dividend has to be a minus 25,000. So in the problem, you typically will be backing into the dividend. You'll have beginning retained earnings, ending retained earnings. You go to the income statement and get the last number on there and put it in. And so we have 25,000 for the dividend. So we'll put that here. Now, if you can do those four things, if you can do those four things in preparing a statement of cash flow, you have a C. If you can just come in and do a statement and do those four things, you can have a C. Can everybody do those four things? Can you get this template and put on this template the net income or loss? We had a loss of 75,000. The change in cash, which was zero. So that's the answer to our problem, zero. Put the dividend down, which we calculated. We show you how to calculate it. And put down the depreciation expense. If you can put those four things down, you got a C on the test. Now, what we have to do, remember we're looking at cash in terms of all the other assets, okay? What's the change in cash in terms of all the other assets, all the other accounts? So when we put that depreciation in, This change is 25,000. Once we put that in, we have taken care of this account. So we're looking at the change in cash. We're taking care of this account. And we've also taken care of the retained earnings account. That change, the change here consisted of a reduction of 100,000 so it went down by 100,000. But that change consisted of the loss, which was 75,000, and the dividend, which is 25,000. So we've taken care of all those accounts. Now let's go to account receivable. Account receivable is a current asset. And in this problem, account receivable was 75. It went down to 50. So its change was 25,000. And that was a negative 25,000 that goes down. When the asset goes down, we're going to put it here. It's a source. So now we've taken care of this account. So we knocking off every account. Inventory did what? It went up by 150,000. If the current asset goes up, it's a use of cash. So we have to put the inventory over here on the use side. Now, the inventory account has been taken care of. And what we're doing is striking out all of these accounts on the balance sheet to come up with our change. Equipment comes next. Equipment went up by 300,000. So that's a positive change, but it's a use. That becomes a use of cash. And so we said long-term assets come to part two. So we're gonna put 300,000 here as a use. So just hang with me. So now we got the equipment taken care of in terms of explaining, looking at the uses of the asset. Now the investment in IBM stock. So we got to look at this account. So the IBM stock went down from 50 to 0. Okay. You had a gain on the stock of 25,000 for IBM stock. We only want operating items in part one. And if the stock cost us 50 and we had a gain of 25, we must have got 75 for it. So the IBM stock went down by 50,000. So when the asset goes down, the current asset goes down, that becomes a source of cash. Now notice what we're going to do, just so we have everything in here. If we have a gain on the sale of a long-term asset, we're going to put it in here as a use because we don't want it uh, in operations. And the proceeds from that sale was 75,000. So we're going to put it here. So with the example, what we're doing is we're getting rid of all the accounts. And so now we've gotten rid of that change. Let's go to accounts payable. We got to look at the change in cash in terms of changing all the other accounts. The account payable went down by $50,000. So if you pay your bills off, if you pay your bill off, your cash goes down. So that's a use of cash. So we're going to put 50,000 here. Now we've taken care of the account payable. Almost finished. The long-term bond, it went up by $450,000. If the liability goes up, if you go borrow money, that's a source of cash, but it's in part 3. That's $450,000. So we have the long-term bond done now. We only got one account to go, common stock. Common stock went from 50 to 100, so it increased. So if common stock increases, it's the source of cash. So once we strike common stock, we have now zero in terms of every other account. Now we go to the statement of cash flow and we add up. So we had two sources of cash, appreciation and collection of receivables. And so that's going to be 50,000. Then for our uses of cash, we had 75, 150, 50, 300. So I think we had this gain, which we had to add back. We didn't want that there. We had the 50 that we used cash here. We had 150 here, so that's 200, 225. So it looked like our uses of cash were 300. So therefore, from operations, we had a minus 250,000. So you may not know how to calculate it. Yeah, but you see part 1 is negative. So you know right away, if part 1 is negative, then there's something wrong. This is not a good company. Let's look at what happened in part 2. They sold some stock for 75,000 and they bought some equipment for 300,000. So This is a minus 225,000 here. So they lost money and they bought some equipment. Well, what happened in financing? Well, they issued some stock and issued a bond and they had 500,000. And they paid a dividend of 25,000. And so their money came from borrowing money. So 225, 250 and 225 is 475. So a minus 250 and a minus 225 plus 475 equals 0. So the change in cash is 0. Well, look at what happened. So as we look at this statement, we see, wait a minute, a minus 250 here. So you lost money in your business. And then you bought some assets anyway, and you borrowed money, pretty much. So that's just like the students who on my roster who never come to class, but they got student loan. They got a big student loan. And then they take the student loan and buy some assets, pay some expenses. So they had money, but that's not the way to get it. So that is the statement of cash flow. Are there any questions?
Yes, can you go back to the total part for part 2?
Go back to part 2.
Oh, well, you're already right there. Never mind.
So part 1, you got a template, the net income or loss, and then depreciation, current assets. In part 2, if you sell an asset, a long-term asset, this is like you selling your car. You might get some money for it, but you're not gonna be able to do much, especially if you go to Las Vegas and spend it all. And you bought some assets, that's good, but you didn't get it from operation, you borrowed money. So part 2 has the long-term assets, stock, land, and equipment. This is not your, this is stock in somebody else. So this might be IBM stock that you're investing in. It's not your stock, okay? This is you made an investment in IBM. So you got your money down here. Well, this is just like you getting your money for the year from student loans. What's that gonna mean for you in the long run? Okay. All right.
And also,
Now
can you go back
that
to the
statement of cash flow example, and you have that, in the primer or in course content, and that handout that's in there. Okay, that has everything in it. But since you all have done those financial statements on your review problem, so we'll add to that now the statement of cash flow, utilizing this indirect method and using this template. But of course, it's going to be good if those statements balance, right? It's going to be good if those statements balance. So now I need to begin to look at statements. Let me just stop sharing for a second. Have you all sent those statements to me?
Yes, sir.
They're in Blackboard and course content. You submitted them in Blackboard.
Yes, sir.
Okay, so let's see. See if I can get in the Blackboard here and see what you all have for me.
Can you take a look at your group me messages, please?
So let me see who's here, who submitted. Okay. Well, Ogilvy. I guess I'll put, what team are you on, Ogilvy? Group 2.
The reason why I didn't send my team's problems because we didn't finish it. So can I still send it? Because we having problems with it.
Okay, that's fine. That's why we're looking at them now.
Okay, so let me send it.
Uh, okay. So I'm just pulling this up, and we can all look at it. Okay. Got an inventory flow chart. Uh-oh, look like we're missing some journal entries here. Which problem is this? Maybe I have. Uh, okay, so let's look at this problem, since I have it, just so let's do some totals here. So Cash supplies, equipment, stock. We don't have anything in the sales account here, so let me look at the journal entries. Well, you got to put all the journal entries in, so let me go to another one that's
I just said hours. I'm in group 1.
so where are you on yours, Bethany? Where are you at? Where you at? Do you have
Okay.
everything done?
Yeah, we did the journal entry, we did the trial balance. We just need to work on the cash flow hourly and the balance sheet. But our balance sheet is not adding up, so that's why we stuck.
Okay, got to go back out because I don't have you in here. So let me back in here. Blackboard. So this is problem 3, correct?
Yes.
So you have all your journal entries.
Yes.
Let's go to the T accounts. Did you post all these journal entries in here?
I believe so, yes.
All right, I'm gonna take your word. Did your trial balance?
Yes.
Well, if your trial balance, you
I don't know. They saying it's not
these journal entries
adding
in.
up, so I was just trying to make sure. But the trial
Okay,
balance,
remember we said you bought the inventory on account.
yeah, so it's account payable.
Yeah, but you got cash.
Oh. At first we had account payable, but
So
yeah.
that's why, so that shouldn't affect you, but that's why you have a negative uh, cash balance now. All right, but so this balance is correct.
Mhm.
All right, so let's look at the income. You put everything here, 881. Now, is this net income 881?
Where you see that at? Oh, yeah, I guess.
You added these up, right?
Mhm.
You got 219. Then you took the 219 and you subtracted and you got 881, correct?
Mhm.
Now, where did these numbers come from?
Um, I have no clue.
You should have had the 881.
Mhm.
Okay. So subtotal 881. So your dividends were 10,000.
Yeah.
So you should have had 871 here, correct?
Mhm.
I told you that what? Just so you would kind of remember this, you got ready to do a balance sheet to do what? Put it right there and in red at that.
So
So
the
let's look at
total.
your balance sheet now. Well, you make those changes. Well, first of all,
So basically, I just have to really what we have to do is change the journal entry, which is supposed to be it's supposed to be account payable instead of cash,
but
and
still we're
then
gonna balance. Even though you did that, you should balance. But what I'm gonna
mhm.
do, I'm gonna put a minus 30,000 in here for cash. Okay. So this should be 751, I hope. And 751, I'm getting 861. 751, 8. So let's assume this is 861. See what we got down here. You have accounts payable 195. You have that up here? Wait a minute now. Now you got accounts payable on the wrong side. Boy, y'all making this tough. I guess once you paid on that account payable, uh, so this actually has to be a minus if it's on the debit side. Uh, then your long-term note was at 65,000. Yes. So if we add these two numbers, well, let me clear the contents. Clear contents. Oh, that's not right. No, I got it. This should be 130,000 now. All right, your common stock was at 100,000. This is a minus 130 now. And what's 971 minus 130? Ah,
I have a question. Will I be able to go back and fix what we did? Or
yeah, you need to fix it. I was just seeing if you were balanced where we are here.
yeah,
So
because go ahead.
861. Yeah, you need to go fix it. Seem like I'm off 10,000 for some reason.
Yeah, because at first we had the account payable and stuff, but then we had a disagreement on whether it was cash or account payable. And then
Disagreement.
yeah,
Okay.
I know now.
Now you showed us balances, right? Clear the contents. Okay, so you are in balance, 1305. So cash needs to be a negative 30, then 500, 280, 1,000, 500, 280, 1,000. Then your equipment was 100 minus 10 would be 90. So let me just check these again. So your current assets are 751, your long-term assets are 90. So okay, this is 841. But you still should have balanced, and we're in balance at 841. But now, even if you had the journal entry wrong, you're supposed to balance. So the issues you had, if cash is a credit, then you got to subtract it in the balance sheet. Then with accounts payable, same thing, it changes its character. So once you change, uh, cash should have a debit balance, you go the regular way, and accounts payable should have a credit balance once you change it. So can y'all now correct that and balance out?
Yeah,
Can you also take a look at ours? Cause there's a lot that like we kind of confused on.
Say what now?
Can you
You
take a
haven't
look at?
submitted?
I did. I just submitted it just so you could look at it. I was gonna fix it before like we submitted, but since I got you here, you know.
Did you just submit it?
Yes, sir.
All right, so let me go out. You tell me you submitted it to me in Word?
That's how it's saved for me. I don't know why I did it like that, but that's how I save.
Well, you have to, yeah, because you got it on the Word document. You have to get the Excel template and put it on it.
Okay. I'm gonna fix it after we do this. I'm gonna send it
I
right.
hope so. Let me see, can I
After
download?
after we fix it, can you like delete this attempt so I could resubmit a different one?
I guess we can now. So I'm still, it's not overly manipulated. Let's look at these journal entries. So you're not balanced, huh?
No, I think we're off by like 15,000.
16,000?
Yeah, 15 or 16.
16,000. So where can we find 16,000 at? Or 8,000 going the wrong way.
I have a question. Well, should I email it? Because I already submitted a temp. Oh, you gonna add another temp on there?
I'll add another attempt later. You got it balanced already?
No, I'm about to do really the whole thing over now.
Okay. You see these credit, you got 3 debits to inventory. 20, 80, and 180. And then you have accounts payable. Okay, so how many times did you buy inventory? Did you buy inventory just 2 times or 3 times?
It was 3 times.
With 20, 80, and 180?
Yeah, so the first one was 2,000 shoes for 10 each. The second one was 4,000 shoes for 20 each. And then the third one was 6,000 shoes for 30 each.
Okay. When you did your postings, supplies to, that's 5,000. Then I come here 320, 20,000. 480, 80,000. I don't see this 180 here.
That could be where we messed up at.
Well, that's one place. So you didn't put the 180 in accounts payable. Now let's go to cost of goods sold. How many sales did you have? 3. So you got 3 debits to cost of goods sold. You should have had 3 credits to inventory. Got it?
Yes, sir.
So you see, if you and you all put those in, so you go back journal entry by journal, I can just kind of look and see that something was off here in terms of your postings. But then you have to go back journal entry by journal entry, so I could look and see where where you left some things out. So we see that now.
So we're missing a credit in the inventory T chart.
Well, I'm just talking about just the T accounts themselves.
Right.
If you had 3 debits to inventory,
Mm-hmm.
you needed 3 credits to accounts payable, and you got only have 2. So you had entries, journal entry 3, 4, and 6 where you bought inventory. But when I look at your accounts payable, I don't see journal entry 6 posted as a credit. So you need that 6 here. Got it?
Right.
You didn't fully post it. Now on cost of goods sold, when
I
you're
thought that
selling
was
something,
cash
you
for the number 6.
say what?
I thought number 6 was cash because it said
Well, if you got a cash, that's fine, just
okay.
so you got it. Okay. So it doesn't matter, you can have it there. It's just so, okay, so you got it in cash. Okay. But what about these credits now? You had 3 sales. If
There is
you had
this.
3 sales and now you see you got 3 debits to cost of goods sold, but you only got 2 credits to inventory. So that may be your number there. 90 and 60 is 150.
Can I ask a question about the sales?
So let me just look at this a second. 90 cost of goods sold. You got 20 and 40. They got to be consistent. Whatever you have in here is debit to cost of goods sold. The same thing has to be credited in here to inventory. So if you work to clear that up,
Professor,
get
I
those.
can't hear you clearly. Somebody else's mic is on.
My man, your
Say
mic is
what
cutting,
now?
please.
So you all see
Thank
that
you.
now. If you straighten out those postings, you should be balanced. Got it?
Yes, sir. Before you move on, so you said it was 6 and what else?
Okay. When I look in here, okay, with 6, you use it as a cash. So you made a cash purchase, that's fine. So ignore that. So 3 and 4, you have down here in accounts payable. There's accounts as well as the supply. That's fine. Let's just leave that as it is. But when you made your sales, you had 3 sales. And in those sales, 300, 300, and 300. I think two were cash sales and one was a sale on account. You got that in there. Now I need 3 credits for cost of goods sold. In cost of goods sold, you got 3 debits, 60, 20, and 40. Okay. When I go to image, when I go up here, I need to see the same numbers. If it's 60, 20, and 40 in the journal entry as debits to cost of goods sold, then I need to see 60, 20, and 40 as credits to inventory. Got it?
Got it.
Yes.
So they have to be the same. So are we clear now?
Yes, sir. Thank you.
Yes.
Everything's clear now. All right, so what's the date? Wednesday. I hate these Wednesday classes. By Friday, you got to then to get these problems done and correct, but you got to add the statement of cash flow. So get that template, and then, so that'll be a nice little practice on the statement of cash flow so I can see how you all are coming. So you'll be very familiar with the problem. Do me a statement of cash flow. What's the first thing gonna be on that statement of cash flow? New company, change in cash. Then the second thing you're gonna put on it is the net income. The third thing, the depreciation, and the fourth thing, the dividend. And you got the problem halfway worked. Got it? So you're gonna add the template for cash flow. I got an Excel template in there, so add that to the template that you have. Add that sheet, and let's work to get that done. Can we get that done by Friday?
Hopefully.
Hopefully.
I'm playing. Yeah, we can.
Yes. Hopefully.
All right, I'll give it to Monday.
That's perfect.
That'll work.
12 o'clock on, wait, I teach y'all on Monday. 12 o'clock on Monday. 12 noon on Monday. I want these submitted with a cash flow statement.
Thank you, Professor, for working with us.
No, for real.
Well,
Thank you
and,
so much.
and we're here to learn and work together and make the adjustments that we need. So if you come and if you have your camera on, and I'm committed to you passing now. If you don't have your camera on, I don't know whether you paying attention or not. But if you come do the work and have your camera on, then it's my responsibility to help you pass. So just keep that in mind. Chloe, are you all going to get y'all's work?
Yes, we'll get it done.
See, I feel y'all going to get it done.
Yes, we'll
All
have it.
right. So remember, that's 20 points. That's a lot of points. You might have a test on this eventually, Might have a test on it. Okay, so we will begin to work on homework problems. We'll review these. So hopefully everybody's on 3. If not, it doesn't matter. I'll review whatever you have. We'll see how you come with your study problem, adding the statement of cash flow midday on Monday. And then we'll go to the homework problems on this and talk about it. And what you always have to tell me is whether you would invest in the company or not. based on that criteria, a part one operation has to be positive, and parts 2 and 3 should be negative. So you're going to be making a decision, and eventually you're going to go and look at a publicly traded company that you might want to work for. You're going to look at their statement of cash flows and tell me whether you would go work for them or invest $1 million in them. You're going to pick a company in Houston that's publicly traded. Got it? Okay. Are there any other questions?
For your virtual office hours, do we need to email you first to schedule a time to meet online, or is there just a course room that'll be open during the
Typically,
time?
I try to come on at 5 o'clock, but you can always let me know. We can talk about, is there a time you all want now?
I mean, time doesn't matter to me. It was just I didn't know where to go exactly.
Yeah, typically, we had it at 5, and I see if anybody is on before I come to class. It's good if you email me and say, well, I'm going to be on or in the class now. You let me know when.
Okay, if I need
I
to
might
meet you,
I
oh, go
might
ahead.
show up at your office tomorrow during your office hours.
Okay.
What
I'll be
time
in
did
my
I mean, what
office
room?
tomorrow from about 12:30 to 2:30.
Okay. Thank
So if
you.
you're on campus, you can come by the office. You know where my office is?
3 something.
Okay. It's across from the restrooms on the 3rd floor. So it'd be
Okay.
good to see you all.
All right.
So it would be good if somebody from every team could come, if that's possible. So we can, bring the problem with me and we'll look at it just like we're doing now. So, okay, so that'll be good. So anybody who wants to come, that would be great. Okay, so we'll see you all in office hours tomorrow. I will definitely be on around 5 o'clock on Monday to look at your problems. If we hadn't talked before then, to make sure you finish that problem and you got the statement of cash flow. And then we'll go through the class time with everybody working on the statement of cash flow problem after we review this. Okay? So you all have a very good rest of your day. And then spend this time and make sure I have correct problems with cash flow statements by 12 o'clock on Monday. Okay?
You.
Okay,
Bye.
you all have a good one. And I'll hopefully see a lot of you all tomorrow between 12:30 and 2:30.